Global stocks and dollar rise in tandem. Wall Street stocks finished sharply higher on Tuesday as market players were encouraged by the prospect of more fiscal aid from Congress, gathering pace of vaccines, and fairly upbeat corporate earnings, while the panic related to the heavily shorted stocks like GameStop Corp has abated. As a result, the S&P 500 rose 1.39%, the Dow Jones Industrial Average gained 1.6%, and the tech-heavy Nasdaq Composite rallied 1.6%. Asian equities are mostly positive on Wednesday as vaccine rollout programs accelerated across the globe. Markets also rose due to renewed hopes for Biden's aid bill amid some signs that Democrats could pass the proposed package without Republican support. As such, Tokyo's Nikkei 225 rose 1.0%, and the Kospi in South Korea edged 1.06% higher. Australia's S&P ASX 200 surged 0.92%, the Hang Seng in Hong Kong gained 0.25%, while the Shanghai Composite Index bucked the trend, shedding nearly 0.5% after data showing the Caixin Market Services PMI in China coming in at 52, representing growth at its slowest pace in 9 months. European equities finished today on a positive footing, with Italian stocks leading the way on the back of news that former ECB President Mario Draghi is tapped to be the next Prime Minister of the country. On the data front, France's January final services PMI arrived at 47.3 versus the preliminary estimate of 46.5. In Germany, the final services PMI came in at 46.7 versus 46.8 preliminary. The Eurozone final services PMI arrived at 45.4 versus 45.0 preliminary. The Pan-European Stock 600 closed up over 0.3%. And as for earnings, Vodafone said that its organic service revenue returned to growth in the third quarter, beating analyst expectations. The stock climbed nearly 6% following the report. Meanwhile, Siemens significantly raised its full-year guidance after a strong fiscal first quarter. The German company's shares gained 2%. Wall Street stocks closed mixed overnight as investors digested corporate earnings and progress toward economic stimulus. Alphabet beat analyst revenue estimates by $4 billion and EPS estimates by $6.58, sending its stock 7% higher. Amazon beat analyst revenue estimates by $5.8 billion and EPS estimates by $6.96. Meanwhile, President Biden reaffirmed his support for a $1.9 trillion stimulus bill that would include direct checks of $1,400. On the data front, the ADP private sector jobs report for January showed that the U.S. private sector added 174,000 jobs during the month, well ahead of consensus estimates of 70,000 and rebounding from a loss of 78,000 in December. As such, the Dow Jones Industrial Average gained 0.12%, the tech-heavy Nasdaq slipped 0.02%, and the S&P 500 inched up 0.1%. As for currencies, the dollar extended its winning streak, rebounding from long-term lows. The euro-US dollar has been gradually losing ground for the fourth day in a row on Thursday, while holding barely above the 1.2000 handle, a break below which could pave the way to deeper losses in the coming days. The pound-sterling-US dollar stays under pressure after a break below the 20 DMA ahead of the Bank of England meeting due later today. The central bank is not expected to alter the current stance of its monetary policy, but the tone of the statement could affect the pair last seen around the 1.3600 handle. Elsewhere, oil prices extended to rally to fresh one-year highs nearing the $59 handle after the Energy Information Administration reported a crude oil inventory draw of 1 million barrels for the last week of January, while fuel inventories were mixed. In gasoline, the EIA reported a build of 4.5 million barrels. This compared with a decline of 300,000 barrels per day a week earlier. The outlook remains bullish, with the futures price trend suggesting tighter oil supply on global markets. On Thursday, however, Asian stock markets mostly fell as caution set in over company earnings reports, recent choppy trading in technology and stocks, and prospects for more economic stimulus. On the other hand, expectations of large U.S. stimulus and subsiding retail frenzy supported risk sentiment. As such, Japan's Nikkei 225 slipped 0.96%, while South Korea's Kospi dropped 1.18%. Australia's S&P ASX 200 lost 0.87%, Hong Kong's Hang Seng shed 1.2%, while the Shanghai Composite was down 0.84%. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.